Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really pretty big week for investment markets this week. You got the FOMC meeting. I think the biggest surprise would be if they didn't do anything on rates now. It's pretty well sort of baked in now that there's going to be a quarter point hike. And then it's just going to be interesting to see what sort of commentary accompanies that. And then more importantly, the sort of dot matrix now to see how many more rate hikes you expect this year in the US. Quite interesting really if you sort of rewind about 3 months. Most people were looking for possibly 2 hikes this year. That had maybe been revised down from 3. Now all of a sudden you're looking at 1 in March and potentially another 2 or 3 before year end, which will more than double US interest rates over the space of 12 months. But that's really against the backdrop of a very strong economy, lots of jobs being created, and it's then going to be very interesting then to see how the Trump administration and its potential new policies are sort of impacted on the economy. One little interesting note out there though is oil. That's trading down again. That's now back below that sort of $50 and trading around sort of 48 bucks a barrel. It's going to be interesting to see what sort of impact that has on supply. The sort of common thought was that as we got above 50, potentially maybe more oil sort of came on tap. That appears to be the case. And so that's sort of driven down prices. So it's going to be very interesting now to see how this sort of pans out over the next sort of 3 to 6 months. ECB in a pretty interesting position. There is a little bit of growth coming forward in the Eurozone, but they're still looking at sort of asset purchases and keeping rates where they are. And for a lot of these European countries, that's negative interest rates. Obviously looming on the horizon now, you've got the French election, and that's going to be pretty interesting as well. See how that sort of pans out. In the UK, final hurdles of sort of Brexit and potential sort of blocking tactics have now been removed, and Prime Minister May is now clear to trigger Article 50, which will then start the formal negotiations to see the UK removed. I think key thing to watch here, obviously the pound's under quite a bit of pressure, but it's going to be interesting to see if they can negotiate a trade agreement with the European Union, as well as negotiating the UK's exit. If they can't do those simultaneously, then potentially it could be a little bit negative for the UK economy. Here in New Zealand, sort of quite interesting. Food prices are sort of pushing up around sort of 6 years highs. And it's going to be interesting as well, to see the impact of that sort of US interest rate hike. Certainly there is a feeling here that inflation is a little bit more rampant than the Reserve Bank sort of acknowledge. And it's going to be interesting to see how it sort of pans out over the course of the next sort of 6 to 9 months. If you are looking for income, sort of quite interesting. Some of the bond yields are really pretty low. New issues coming through as well. It's a pretty good time for issuance. Looking at sort of 5 to 7 year bonds that are coming in are sort of low 4s to sort of high 4s. I've discussed many times, there are plenty of options out there for income. And if you're interested in discussing what options are available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.